Good morning, everybody. This is Mark, and we're back here for the morning call. Scott will be back on Monday. So this morning, what is happening? Obviously, the S&P is up a little bit when I came in here. Nothing too exciting on that front. We have lots of earnings that came out after the bell. This market is interesting, to say the least. I would have thought 2 days ago, 3 days ago, before Apple's earnings, we were on certainly a downtrend. Apple changed the dynamic of the market. And what I was saying yesterday was, first day, you got to be, or actually the day before, I'm sorry, is Apple going to be able to change the entire dynamic of the market to get us back in that uptrend? And in my opinion, it seems like they caught some shorts. I think there's going to be a little bit more time that's needed in the S&Ps for us to really break through to new highs, but I think that's going to be in the cards. And I do think you're going to get some back and filling over the next few days or few weeks, but overall, I think the buy on pullback strategy, which we've been talking about really since the beginning of the year, is back in play. So let's take it to the charts and see what we have this morning. So looking at some ideas, let's put up the spiders at first. A little resistance, I'm looking at around 141. We're going to put up the hourly chart, the 60-minute chart, and you can see it would be filling the gap going back to about April 3rd, 141-ish. So use it as a little bit of resistance. I didn't even think we were going to get this far, this fast, but that's what the market does. It never lets everybody, it keeps everybody on its toes. And quite frankly, I think it caught a lot of shorts by surprise, and it's making things tricky for them. Now, this morning, stock of the day, we normally talk about Apple. Yesterday was the first day. I don't know if you were listening to us a little bit more timely on the radio, but it was the first day we were not trading Apple minute by minute. It really just needed a break yesterday. Had a little bit of a tighter range. I expect that to happen over the next few days regardless. Stock today that we have to focus on is Amazon. You can see it right now. Came out with earnings. Pre-market, it's trading around 228. I think there's a little resistance, maybe about 230, 240. There's certainly some resistance. I think it caught a lot of people by surprise. The stock has not participated in any move this whole entire year, and I think it's ready to, obviously it's showing its strength. It had good earnings. It's showing that it's still a leader, and now it's going to be back in play, which is good because, quite frankly, it's really just been out of play. You could have picked and choose your spots this year, but for the most part, it hasn't done anything. So right now, 230, a little resistance. Maybe it's a little bit of a short, a little bit digestion, but overall 240 is the real resistance for the stock. Other earnings plays that I watched and that should be on our radar, DEC, new lows. I believe it's down below 60 this morning. Again, that is on an earnings play. We'll have to wait and see. Not expecting a whole lot from that front. Right now, I didn't expect the market to move as it did over the last few days. Friday, we're obviously April. Started out as a pretty tough month, and overall we're ending April not too bad. I actually think probably just about unched overall percentage-wise, but we'll have to wait and see what it brings today. Rotation. We've been saying it for the last few days. Seems like some of these commodity stocks, you could first look at the OAHs, which isn't as exciting anymore since it's split, but Schlumberger had a nice move. They had a nice move from the bottom end of its range, 66, which was almost at its, low back to late December, back to the mid-range, 74, 75. Along that front, just to mention a few names, APC. Some of the best in breed that I have seen, and we've been talking about, PXD, natural gas, has been on fire recently, and some of these stocks obviously have taken flight. Nice looking chart at 105. Testing new highs. CLR is along that road. Nice 2-day uptrend. EOG, 2-3-day uptrend. It looks like they're waking up a little bit. It's been a sector that, quite frankly, has been dead, really non-existent from certainly a short-term trading point of view. I think it's something that has to be watched. Even the home builders, we don't mention it that often, but they had decent days yesterday. Toll, Ryland to new highs, yearly highs. Len, which I think is best in breed, along with one that most people can't trade, NVR. It's a sector that certainly has to be watched. And the fact that it's at new highs, the market's not at new highs, it's showing me relative strength across the board regardless. Banks, little back end filling is happening. I think that continues to happen today. We'll have to wait and see. I don't see Goldman Sachs, J.P. Morgan, WFC. I don't see them breaking out yet, but overall, buy on pullback seems to be the right strategy, and to date, that has been the right strategy across the board. Overall, guys, I think this market is a market of stocks where overall I do not, as earnings, begins and as we're in the thick of it and when it starts to pass, the cream rises to the top, and the stocks that really, quite frankly, cannot perform with the tape start to really falter off. And we're seeing that in droves at this point in time. Amazon now is back on everybody's radar. Apple certainly has been on everybody's radar. Two other best in breeds that I consider and I've been talking about. Priceline the other day held 700, back to 7. I think it's up 740, 745 this morning. It's up basically on Expedia's news, EXP. It's a stock, quite frankly, that I don't think a lot of people, if you haven't been doing this for a number of years, you probably have never even traded. I think it has to be put on everybody's radar across the board. Today might be a little tough. Obviously, it's at $38, $39, but same business as Priceline. Obviously, Tizu is. Priceline certainly has been best in breed, but based on valuation standpoint, I do think it's a stock that needs to be watched. Let it find its new levels, and who knows? With good earnings, we know what Priceline has done. Less shares outstanding on Priceline, certainly, but it is a heavily shorted issue, so certainly keep it on the radar today, knowing that it is up $7, $8, about 17%, something to that effect, on earnings. And lastly, gold and silver has been on the radar for me, but you can see a trend line is really probably around against 161.50. Broke down, broke, come back up. It's been flip-flopping, ping-ponging in a range, and at this point in time, it's been a very tough short-term trade. I think a new buy would be above 161.50. I don't know how aggressive I would be. Probably that move would be to about 165. And lastly, we'll just mention the Chinese stocks. I think they're important to mention. Baidu had recovered a little bit into earnings. It's basing at this point in time. Basing, unfortunately for us, for right now, basing below its 200-day moving average, to me means that that's not relatively strong. Some of the other stocks have shown, are showing decent strength. NetEase, new highs yesterday, couldn't really hold it. Sina, Sohu, something to keep on the radar. Lastly, the Ags. Came out with earnings the other day. POT, not great. MOS, decent earnings, so it's a mixed bag, but then you have best in breed CF that needs to be watched. 192, 191 trigger for a swing long. I'm just trading it in and out at this point in time. Again, 2 days ago was the first day I put on a bunch of positions in the swing. I'm still light, and I do expect a pullback, and on that pullback I will look for more opportunities across the board. I'm not macro long. I think there's going to be a lot of digestion that happens over the next few weeks. So I don't think you're going to miss anything, but I do think it's a market of stocks at this point in time. You got to be in the best in breed, period, end of story. You know what they are. We talk about it every day. I just think that's important. Do not be in stocks and issues that are not in play. Good luck today. Have a good weekend. I'll see you on Monday.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.